start thinking about the anniversaries, not a lot of people are checking out their real estate portfolio if they own one house on an annual basis. Is there any big, real estate related anniversaries that you can think of?
I think the anniversary is a tough kind of metaphor because the most important thing about real estate is keep your eye on the ball. The markets are changing all the time. And I think about my own relationships. If I wait a whole year to check in, my wife's not going to be there anymore.
Right.
So it needs constant nurturing. And real estate is so dynamic and such a wonderful opportunity. We have that ability with a little bit of effort to see where the market's going, make some plans, make some changes, and stay ahead of the game instead of, whoa, look what happened last year. It went way down.
Yeah, it's interesting because I think you're right. If you were to look at, say, year over year, especially over the last 5 years, right? The last 5 years have been, less than consistent, I would say. We have huge swings, up, down, and now back up. When you start looking at the real estate market, just from July of 2007, which was really the bottom, the top. That was on the top. And then you had 5 years of this kind of going down, and then February of last year, you see the bottom. And then, huge swings, and now here we are, 4th of July, 6 years from what I guess would be the peak of the market? How do you gauge what's going on a daily or weekly or monthly basis if it's so dynamic that every year is not consistent enough?
Well, that's the neat thing about it. There's wonderful indicators in the market, and they tell us which way we're going. And the real question is are we going to pay attention to them? We look at the number of houses that are being sold. We look at the number of pending sales, which is an indication of what's going to be sold, activities in the marketplace, and we start looking at inventory. And we can look at all these factors and say, oh, there's a little roadmap, and it's telling me something. And then it's up to me to say, ooh, I need to do something because this road looks very treacherous, or this road looks like it's going to keep going up forever, and I'm going to leverage big.
And so what are some of those indicators that you're really looking at?
So right now we're looking at a marketplace that's been really frenzied. It's been a seller's market. There's been a month's supply of inventory, and buyers are clamoring to get houses. They want houses. They need houses. They can't get them. There's multiple offers, and you put in over full price offers, and you still don't get the property you want.
Right.
It's very frustrating. And so you have this momentum that's been built up because of lack of inventory. Well, what's shifted? Interest rates have changed a little bit, and all of a sudden, just as you drive around, this doesn't take a lot of analytics. You drive around, you start seeing more signs. You go, oh, there's more for sale signs out there. I wonder what that means. Does that mean that we're coming into a more normalized market? Probably.
Yeah, it really are more signs out there right now.
Yeah.
There's no doubt.
And so it's not like you're having to get on your computer every night. You can see these things that say, if I'm investing, should I spend $20,000 over asking price on this one? Or maybe I should go a little bit more conservative because there's going to be more opportunity for me in the near term.
When you start looking at the rise in interest rates, and we're talking a juggernaut of quick rise in interest rates. 1.25% over a 6 to 8 week period is a massive increase in interest rates, the biggest really we've ever seen in the world of mortgages. How do you see clients reacting? If they're buying a house, how do you see clients reacting to such a quick rise in interest rates?
On the investment side, we don't really use a lot of financing, so that's not impacting us. The typical response is, they're going to go even higher. I better jump in now. And you have hundreds and hundreds of people all jumping in at once, scrambling to get these great low rates before they're gone forever.
So kind of this fear of loss of even missing out on the 4.5 now, where they already missed out on 3.5, and now they think they're going to go back to 6, 7, 8, whatever.
Yep. And so everybody jumps into the market. That's the typical response. And then one day they say, well, we missed it, and things go quiet.
Do you tend to think that's what's going to happen coming up? Do you tend to see a big frenzy of buyers right as the shock kind of hits them, and then you'll start to see it normalize?
I think so.
Yeah, my take on it was you end up kind of with another quick increase in prices in what the value of homes are, and then a very fast leveling off. simply because you'll get people, like you said, jumping into the market off the fence. They want to do something, and then eventually it normalizes and just goes a little bit more flat, or a normal, at least a normal pace.
And that inventory, as more and more homes come on the market and are available for people to purchase, that slows things down. And that's the direction we're going. And it's not going it doesn't feel like it's going to be a radical shift where these houses just sit on the market. Interest rates are still very attractive. Prices are still lower than they have been historically. And so people are looking at it as a good opportunity to get in. It's just you don't have to panic to get one today. Maybe something that you don't even like as much as you might if you had more choice.
Patience is somewhat okay, huh?
I think so.
Yeah, John Whitney joins us with HeatonDainard. John, so you just mentioned a little bit about, maybe having patience being okay for a buyer right now. More houses are going to come on the market. Do you see buyers being more patient now than they were a few months ago?
I don't.
It's okay to be more patient, but nobody is.
Well, that's the sad thing about it. Nobody's looking at the signs. They're saying, "Oh, my most recent experience was I got beat out. I need
It's competition over a house. It's not finding the right one."
Yeah, it's competition, and I need to get one because I'm going to lose out here. And yet all the signs are saying something different. The signs are saying you're going to have that opportunity to get just the one you want. Just be patient.
Mm-hmm.
But that's not what's happening.
Right. How many more houses are going on the market right now? You said that certainly you can see more. Is it a drastic increase in inventory, or just enough to meet the market, or still not enough to meet the market?
Still not enough to meet the market demands. With a 1 month supply, it's extremely tight. And even if we had a 2 month supply, it's still extremely tight. But that would be twice as many houses.
Mm-hmm.
So from a buyer's perspective, that's a lot more choice.
Sure. But still, now instead of 20 offers, there's only 10 maybe.
Sure.
But that's still a lot of competition.
It is.
So when you're working with buyers on houses right now, what are you telling them as far as strategy?
Most of the real estate that I do is investment real estate.
Mm-hmm.
So we're looking for good opportunities in the marketplace, opportunities where people will make money. And
are they out there right now?
All the time, every day. Last week we had, I think, 3 great opportunities where I was buying homes in the low 100s in King County. And anytime you can get a house for that price, it's pretty incredible. Your mortgage payments on something like that are $400 a month.
Mm-hmm.
And people will tell me, I could
Where
rent.
is a house for that amount? I think Dennis would, Tukwila, as Dennis would say, in between the furniture shops or something.
Yeah, Tukwila, Auburn, Federal Way, Des Moines. They're neat opportunities because you can take these things, you can put a little bit of money into them to bring them up to the standards that they need to be, and sell them for a lot of money and make a good profit.
Mm-hmm. And these are still opportunities that are out there. How competitive is the investor market right now?
It's extraordinarily competitive. There's a lot of people, a lot of new people getting in. A lot of people are
Get rich quick is back, huh?
I guess so.
Yeah.
A lot of people are jumping in. It's harder to do than I think a lot of people realize, and some people are overpaying for properties where there's no indication of what the back end will be. They just say, "Oh, this is the cheapest price I can get, so it must be a good deal." Sure.
Well, and I imagine all the TV shows out there about flipping properties now. I mean, there's like 9 of them. It's not just like property flippers. It's my brothers flip properties, and here's a husband and wife that flip properties. I mean, if you like every other TV show is about flipping properties, it must drive a lot of people into the market because at the very end of these shows, I watch them. At the end of these shows, though, you get purchase price, how much they put into it, sold. Hey, this guy made $75,000. It took like 30 minutes.
I wish it was that easy. It does take a lot of skill, I guess, for people that are jumping into it. I would recommend that they go with a team. I think it's extraordinarily hard to do by yourself, and you really need resources of other people around you that can supply the things that you can't quite do yourself.
Mm-hmm.
And the people that go it by themselves a lot of times wind up on a cliff.
Yeah, I would imagine putting themselves in a pretty tight situation.
Yep.
John, we just have a minute left. Again, we're here with John Whitney from HeatonDainard. What do you see happening here over the next 6 months to a year?
Depends on
Crystal ball time, John.
crystal ball time. I see the marketplace normalizing a little bit. I see more inventory coming online, a balanced market between buyers and sellers, and appreciation flattening out. None of the lightning pace stuff that we've seen in the past. It's unsustainable. You cannot move that direction that quickly. But on the other hand, I don't see it pushing way down either.
Oh yeah. The unsustainability is a huge factor there. I mean, it's not. It's kind of like with at some point in time, if your continuing house is going up 15%, they'd be doubling every 4.5 years.
Pretty amazing stuff. However, if interest rates were to double from where they are today, I would see downward pressure on the market.
Yeah.
And that's that importance of looking at things on a continual basis as opposed to just saying, oh, look what happened here. Interest rates are really high. Now I can't sell my place. What am I going to do?
Yeah. How much, and again, we do have to go to break, but how much time should somebody be spending looking at real estate? I mean, the easiest place, I think, for people to go, and this is why there's such a huge company, would be like Zillow. You go in, it gives you a little price. Maybe accurate, maybe not. But, you see that you do. If you go to Zillow, you see these swings. You can enter your house. They'll even email you the changes in pricing or houses that have sold around you. How often should somebody be focused on these types of, reports?
I think the importance here is the team. The reports just give one piece of data on one house that you're talking about. I think it's really important to have a trusted team around you and talk to them and say, hey, where are we going today? Because now you're going to have hundreds, if not thousands, of data inputs, and you can say assuredly, this is the direction we're going and why, as opposed to trying to do it yourself and saying, oh, Zillow said my house went down. Well, what happened there is maybe 3 or 4 houses that were less expensive and not even close to the quality of your house in your neighborhood got sold. So the analytics say it went down. In reality, the market maybe did something else.
Oh.